All right, welcome back, everybody. Today's going to be the weekly recap, week ending on July 9th of 2021. I want you to stay tuned today because we're going to be talking about some really cool stuff here, stuff that you probably, almost guaranteed you've never heard before. And what that is we're going to be talking about predictive modeling, which is the key to long-term success, and how that really goes into how the market expresses itself. I like to compare it to a hologram, so to speak, but we'll get into that a little bit later. But first, let's take a look at our stats for the week. All right, so here we go. These are, once again, these are going to be the naked stats for the PAP pattern. Remember, we have a total of 5 that come with the core package. When we say naked, that means we're not doing any kind of filtrations if a buy or sell is generated. We track the results of that buy or sell. These are very specific, so there's no guesswork what strike to get into and where to get out. And these are going to be the results, once again, right where we would expect them to be in the 70 percentile, anywhere between 70 to 80%. Remember, folks, this has been going on for years, okay? I started this I've been trading for nearly 40 years, discovered this about 30 years ago, and these are very, very solid patterns, okay? So there's no doubt they're going to continue to hold up, and they work across the board in other instruments. So that being said, had a really good week percentage-wise as far as the first trade of the day. This week actually hit every single one in the morning at 100%, meaning with 5 out of 5. And we were 4 out of 5 in the evening, so still 80%, 100%, average 90%. It's right where we would expect to be on the first trade of the day. First trade of the day means when I come in, I'm coming in at 8 a.m. Central Time, which is 9 a.m. Eastern. I'm taking the very first trade on these first 4, whatever pair generates to buy first, I will take it. And or if I have 2 that generate to buy at the same time or a sell at the same time, I pick one. Sometimes I pick the right one. Sometimes I've seen it to where I pick the wrong one and the other one won. That's just the way it is when it comes to trading. So that being said, very good week with the stats as far as CB trades. Not a bad week. Didn't do a lot of trading this week. Really was focusing more on putting together a new webinar. By the way, we are having a new webinar that's going to be coming out. If you're on our mailing list, fantastic. If you're not, please let us know. Go to my website, binaryprostrategies.com, and let me know you're interested in the webinar. We are going to be getting into a little bit more details of some of the things I'm going to be covering today, and it's going to be very good. Also, please, there's been some that say that our emails are ending up in their spam folders. So if you haven't been notified for prior webinars, check your spam folder. Make sure it's not ending up in the spam folder so we can make sure that we get you signed up and on board for our next one. We do have one coming up here shortly, so make sure you get on our list so we can send that to you. All right. So overall, very good week. Pretty much where I would expect to be. Didn't do, like, once again, didn't do a whole lot of trading this week with CB, but it was one of those weeks where I just had a lot going on and wasn't able to fully focus and concentrate. So most of my trading was done early morning and late afternoon. Well, actually late in the evening. So early morning in the evening was the majority of the trades that I was putting on for CB. But once again, CB had a very good week as well. So whether you're trading core, whether you're trading CB, they're both very, very good. And we're going to be talking a little bit more about what are these patterns. Well, we call them behavioral patterns. And so let's get into that. Let's talk a little bit more about that so y'all can kind of get an idea of where things are kind of heading. This is kind of beginning to become more on the cutting edge. I mean, this is something that we were talking about 30 years ago, and now I think some traders are beginning to see the light that it's going to be pattern based, right? It's not going to be indicator based anymore. We're looking at patterns. Those are the most reliable form of setups that you can find. Patterns are just, indicators are just not going to do it for you. Patterns will do it, and we have proven that over and over and over again to show that these patterns are highly, highly not only predictable but repeatable. And it doesn't matter whether I'm trading an Aussie US or I'm trading a gold or a silver or stock, these patterns continue to repeat themselves. So with that being said, let's get into it. Let's get into a little bit more into what exactly are these behavioral patterns. Okay, so let's talk a little bit about behavioral patterns, but first, what I do is based off of predictive modeling, okay? And this is a very, very important concept to understand, all right? And as far as I'm concerned, I have never found a better way or a more reliable way to trade than based on this predictive modeling. So first of all, what is predictive modeling? Predictive modeling is also called predictive analytics, right? It's a process that seeks to predict future events or outcomes by analyzing patterns that are likely to forecast future events. The goal of predictive modeling is to answer this question based on known past behavior, which I call behavioral patterns. What is most likely to happen in the future? Okay, so basically what these behavioral patterns are is they are predictable emotional reactions on a mass scale to a particular event and or events, right? And they come in, they express themselves, all right, in 5 dimensions, and this is so important. Most people that are trading right now only trade in a 1 dimension, all right? And that's why they have such erratic results, and that's why it doesn't hold up, because they haven't identified the other 4 to 5 dimensions that are part of the first dimension, right? It's going to express itself at 5 different dimensions, and I will be getting into more of that when I do the live webinar coming up, okay? So we're going to get into that. It's going to be free. We're going to be getting into it, and we'll be talking a little bit more about these other dimensions and what they are, okay? So what are the advantages of behavioral patterns? Are they have no lag time. Very important. That's the problem with indicators. Indicators have lag time, and you all know that. If you've used an indicator, you know how frustrating it could be to do your back testing, and all of a sudden you find that this great back testing showing you're making all this money, and you run it forward and can't even make money for 10 days out or 30 days out. Okay, well, markets, first of all, are not expressed like that, and second of all, you've got that lag time in there, so that is not going to help you. You need to have something that is going to give you an indication of where the market is going right now, today, all right, or over the next day. That's real important when it comes to trading. We need to know, where is the market going to go right now? Not what has it been doing, or some sort of lagging indication, because that's not going to do you any good. Is you need to know, what is it getting ready to do right now, so we could put a position on and capture that movement right away. Okay, and that's the key. So there's no lag time. The other thing about behavioral patterns is they work in all markets and conditions. This is so important. If something is going to be predictive, right, it has to work across the board, right? So if it's really a strong pattern, I should see it work just as nicely in a stock or a commodity as it does if I'm trading a forex pair, right? Because we are people, and people are basically going to react the same way to the same information that's coming to them, and they are going to, on a mass scale, they're all going to basically have more or less kind of a herd mentality. And that's what we're looking for. We want to have that, and we can see it over and over again in these behavioral patterns, and it doesn't really matter what it is that we're looking at. They're all going to be the same. They're all going to be working the same way. They're all going to be predicting the same type of movement based on what the majority of people are looking at. Okay, they're non-subjective. Okay, so there is no, it's very black and white when it comes to a behavioral pattern. It tells you specifically if the market's going to go up and or if it's going to go down. It's not subjective, and that's the other problem with a lot of these indicators. They're so subjective. They never really give you a clear indication where to get in, all right, and or where to get out. They are very, very subjective. Well, with patterns, they are non-subjective. And that's real important, because it moves into the next thing, is we can quantify them. We can measure them with historical testing. And so way back when I was first working with all of this, I was able to go back and I was able to do historical testing to see if what I had really was effective. And not only that, as I ran it across stocks, commodities, you name it, because if it's going to be predictable, if it works in the S&P 500 should work in a forex pair, should work gold and silver, and I should also see the same thing working in a stock, okay? And it did, and of course now after all these years, obviously working with real-time data, and we do have real-time data, obviously these percentages continue to hold up over and over again. They continue to repeat themselves, as they should, because people are basically the same whether they're trading a stock or they're trading a forex pair. All right, people are the same. So basically what we're really getting down to is all market movement is expressed in 5 dimensions. But most people only trade in a one-dimensional market. So let's take a look at that. What do I mean by one-dimensional? Particularly when it comes to patterns, okay? So this would basically be a one dimension, okay? So people, particularly if you're pattern-based or indicator-based, are only looking at a particular relationship. Now, this is a strict bar chart. You could have candlesticks. It really doesn't matter, all right? But these are basically, this is a regular bar chart of the Aussie US. This is based on a 5-minute basis, and you have these patterns. What most people do is they look for this high-low relationship and how it closed. So, you have a bar that closed, it opened down here and it closed up here. It's a green bar, so there's buying, and then it opened a little bit higher and it came down, settled the mid-range, but it was still a red bar. People are always looking for these kind of different types of patterns to see, do they have predictability? Well, they do, but not reliably on one dimension, okay? They're missing the other 3 dimensions to get any kind of predictability. So you really need to have a total of 4 dimensions if you want to go ahead and you want to trade these particular patterns. You can't do it without the other 4 dimensions. Like I said, there is a total of 5 dimensions. Now, 5 dimensions is something that we really get into when we talk about our crystal ball method. Now, the core strategy within itself, we teach you about the 4 dimensions. That's really all you need to be a profitable trader. The difference is when we start moving into the 5th dimension, we're talking about the 5th dimension gives us indication of size of movement, okay? And why is that important? Particularly very important if you are trading options, right? Particularly binary options, because when we're trading binary options, we love to sell something for $90, risk $10 to make $90, right? Buy something for $10, $15 and make yourself $85, $90, all right? That's what the 5th dimension allows us to do. It allows us to get indication of size of movement, okay? So having all 5 dimensions obviously is going to be the way that's going to give you that opportunity to be successful in your trading, all right? But the first 4 dimensions are absolutely critical to understand it and learn it and become proficient at trading in 4 dimensions before you ever get into 5 dimensions. So once again, I do have a webinar that's going to be coming up here. We're putting the final touches on it, and we'll be getting into a little bit more details on everything. If you want to know a little bit more about the core strategy, you can always go, obviously, to YouTube, Binary Pro Strategies. Look at all our videos there. Or you can go to my website if you have any questions. You can contact me that way as well. But besides that, that's going to wrap it up for today. Once again, we will be back again next week. We'll do our weekly recap as we always do. We had a really good week this week. I expected the percentages to start coming up as they did. Remember the prior week, I was a little bit weak in some of the others. The percentages were down a little bit. The market has a tendency to come back strong and compensate that, okay? And that's what it did. So I'm expecting, even going into this week, I see some early indications that the volatility is going to start picking up. And I think we're going to have some really nice setups. Whether you're trading core or whether you're trading CB, there's going to be a lot of really good opportunities for both those that trade in the money and are out of the money. All right. So, or even at the money. So looking forward to that. I hope that everybody has a great trading week, and we will see you next week on our next weekly recap.